If you don't like the words LODOC lending, then please listen on. So having worked with accountants for many years, the word LODOC lending has got really negative connotations. So traditionally, accountants don't like to write an income declaration statement because a lot of times the governing bodies and their industry bodies have been quite negative about it, and that's completely understandable. But what clients don't realise, and they push onto the accountants, is that LODOC lending doesn't mean your accountant has to sign off a letter for your income. LODOC lending come in all different forms of income verification, and traditionally LODOC lending means that clients don't have up-to-date tax returns to provide to the bank based on their policy. So to give you a couple of examples, we can use a BAS statement. So a BAS statement traditionally is lodged every quarter. We can use one BAS statement or 4 BAS statements, depending on the lender, to demonstrate the best amount of income. The way they calculate it, and a similar video that my colleague Gabrielle did, was doing certain formulas. So it could be a percentage of sales, it could be a formula based on some numbers that we extract from the BAS statement. Another way for LODOC lending to be evidenced is financial statements. So it's not tax returns, but we can look at profit and losses. So that could be now the 2024 financial year, and we can evidence it that way. And lastly, there can be a self-certification that the client offers. So they're declaring the income based on their own knowledge of their financial position, not requiring an accountant to further support that. So for the accountants out there, we understand your frustration. We don't like to go down that track. If you're getting that pushback from your clients, wanting to provide that documentation, feel free to reach out. We can maybe look at some other options.